beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index is down 0.8%.
We didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years.
The Nifty support stands at 24,738, the 40-hourly exponential moving average.
The new, situation, I think the order book position will be substantially higher.
It's 25,000 on the Nifty. It's Nifty Bank, which is starting at about 55,357.
Even if you take whatever order book you're expecting, take the reasonable profit margin, discount it to today, there's no way you can justify this kind of valuations.
We expect more than about 1,500 crores contracts to happen this year in terms of new orders.
We're seeing a bit of consolidation on the index, but the good part is that the Nifty is still holding on to levels of 25,000.
Well, this confirms a CNBC-TV18 news break that the government is all set to go in for emergency procurements and replenishment procurements as well.
The Vodafone Idea had filed a writ petition seeking an urgent hearing on seeking relief of up to 30,000 crore rupees worth of AGR dues, and that petition has been dismissed by the Supreme Court.
Nifty has managed to slip below the 25,000 mark, but the broader end of the markets is doing quite well.
That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Surbhi, Prashant and Nigel. The boys will also be joining us on the show. For the market, Surbhi, per se, it's been a quiet session of consolidation, though there is a bit of a downward drift as we speak. The Nifty is now down close to about 80-odd points. The sensex is down nearly about 300 points. As you can see, we're now at the day's low, and the markets, which were largely sideways till about 130, are now seeing some amount of selling pressure. Again, not too much to worry considering the 4.5% gain that we had on the benchmark indices last week, and lots of individual stories doing very well. So whether it's the two-wheelers, whether it's the PSU banks, look at the way the Nifty PSU bank is rallying today.
Absolutely, and I'd say this is not a bad performance at all, considering the fact that we are dealing with a bit of a global caution this Monday afternoon. If you're looking at most of the markets, I'm checking. Let's start by looking at US futures. The futures, for instance, Nasdaq futures are down as much as 2% right now. Even the others, S&P 500, Dow, all the futures are down. So there's general caution because of this Moody's downgrade of US government debt that happened. Many of the Asian markets ended weak as well. By the way, the US 10-year yield has moved up considerably. I mean, that's something you can't ignore. We're looking at 4.5% on the 10-year again after a good 3 months. I mean, I was looking at the chart backdated. The last time the 10-year was at this level of, we should pull up the US 10-year yield. Yeah. The US 10-year at 4.53, almost 5.4 now. The last time we were at these levels was 3 months back, 20th of February. So there's a general sense of risk aversion out there in the market. By the way, in the UK, there's a lot of talk about this reset, quote-unquote, reset of relations between the UK and the EU, perhaps because of what's happening with, of course, the tariff talks around the world. They're looking at some sort of a, deal on various aspects. That because of that, the pound has rallied quite a bit. So there's a lot going on globally. The Chinese data points that we got today, they were not the best because both retail sales as well as industrial production in China, it's come off in April versus the month of March. So in general, short point, there's a bit of a global caution out there. And against this backdrop, perhaps the Indian performance is not too bad. Hi, Nigel and Prashant.
Well, yeah, that's right. I think the broader markets, though, continue to outperform, which is at least something that we'll take away from today. But I think we have Mitesh back with us, who's joining in on the show. Hi, Mitesh. I think we have Rahul Sharma, in fact, of JM Financial, who's joining in. Hi, Rahul. Good afternoon, and good to see you in. What do you make of the Nifty's moves? Today we're pulling back a little bit, 60, 70 points lower as we speak. But otherwise, the trend has been up. At what point of time does this trend get nullified?
Yeah, very good afternoon, Nigel. So, like rightly said, the major trend of the market is still up, and this is still a buy on dip market. Dips, there's a lot of money which is waiting on the sidelines, which is ready to be deployed. And what we feel is 24,800 as an immediate support and 24,500 as a major support should be the key levels to keep an eye on for the next 3-4 trading sessions. And considering the way some of these sector rotation is happening across the market, we feel that it's only a matter of time that eventually Nifty will see the dip get bought into. So I think positionally this is still intact for a possible target of 25,500, 25,600. It's just that we're spending some time after hitting the big landmark of 25,000, post which we should see the momentum coming back.
What about stocks, Rahul?
Yeah, so one space that we are very positive on is the Nifty Reality Index. So the Reality Index has come out of the consolidation. Today we are seeing a breakout happening. The index has crossed its 200-day EMA. A lot of stocks are coming out, from these sideways structures. So one can take a basket approach for the realty space, the likes of DLF, Godrej Properties, Lodha, Shobha. These are the top 4 stocks which we feel can pack a punch. So over the next 1 to 2 months time frame, we feel that there can be a 14-15% upside that can be had in this basket. And at an index level, we could be very well sitting at a 10% kind of an up move in the very short term. So reality is the space to go for. A basket approach is something that we've recommended clients, and we feel that this is one sector which should play a catch up over the next last 10-12 days, especially of the May series, and in the June series also we expect the momentum to continue.
Thank you very much for that. Lots of mid-caps in focus. So Graphite India and HEG as one company has halted the production of graphite electrodes in China and Malaysia. Resonac Japan. Nigel will talk more about it. Railway stocks continue with their optimism from last week. RVNL has surged another 5.5%. IRCON is gaining on large volumes, a 4.5% pop on that. PSU banks are active and excited. Central Bank of India, IOB, Bank of Maharashtra, UCO Bank. All these stocks are boasting of gains of about 4.5%, 5% on some. And then you've got earnings reaction. Delivery is the one which is topping the charts. But the big story of the afternoon is on Vodafone Idea, where the Supreme Court has dismissed the writ petition filed by Vodafone Idea and Bharti Airtel for exemption from AGR dues. Ashmit has been on top of the story, joins us for more. Ashmit.
Well, a big shock coming in for telecom companies, Bharti Airtel, and particularly Vodafone Idea. The reason being, the Supreme Court saying that their petition seeking relief on account of AGR dues, relief of waiver of interest and penalty dues, is a shocker, is misconceived, and therefore the Supreme Court has rejected their application. The Supreme Court expressing shock as to how they could seek this relief when this has explicitly been denied in a very clear judgment, and then subsequently review and curative petitions were also dismissed. So the Supreme Court saying, we will have none of this. The petitions deserve to be dismissed outright. Now, this comes as a huge setback. Bear in mind, Vodafone Idea had knocked on the doors of the DOT before coming to the Supreme Court, and they had given a very bleak picture, saying that there is no bank funding coming, there is no relief that is coming from the government. Without any government relief, the company could very well head into insolvency. It will not be able to survive FY26. It won't survive the winter. That's the bleak message that was given by Vodafone Idea. And what's important is that the government is very, very clear in its view. The government had rejected that call for relief by saying that, look, our hands are tied on account of the Supreme Court's AGR judgment. So with that, we understand the government is saying that our hands are tied. We can't do anything until the Supreme Court tells us to do it. The Supreme Court saying we will not have any of it and dismissing the application. So in a manner of speaking, closing the subject, closing the door on AGR relief, and that coming in as a huge, huge setback for telecom companies and particularly Vodafone Idea.
Thank you very much for that. The Supreme Court finding the writ petition shocking, but the verdict per se, the fact that Supreme Court has rejected it, doesn't come as a shock, as Ashmit said. It was anyway a moonshot by Vodafone Idea to go ahead and appeal under the new Chief Justice of India. It's been denied. The stock is down 10%, and Indus Towers has fallen in sympathy. That's lower by nearly 4%. Prakash Diwan is now with us. Prakash, the story goes on and on. What now for Vodafone Idea?
Good afternoon, Rima. So, as I mentioned on Friday, when the statement from Vodafone came about its inability to service all these dues in the absence of bank debt, this seems to be like, as I said at the beginning, of the end for this issue. It's not the end for the company; it's the end of the issue that's been kind of a big overhang for the last many years now. But what seems to be happening is we are in a very positive state as far as the expansion of the business is concerned. It's just that the balance sheet issues continue to weigh very heavily down on Vodafone. So some solution will have to be brought in because there was no point bringing it to this stage where it started expanding, doing well. They placed orders for newer towers. The expansion to 5G's the rollout has been much more aggressive than what we thought. But with these significant subscriber base that it manages and being a respectable third player was the objective, right? The government always had a 3+1 kind of objective. And if that were to be met, there has to be a solution out. So I don't know what form and shape and time the solution will emerge, but it's kind of difficult to write it off from this level. So all the downside is in the price for sure. I will just have to wait for it and painfully it will grind upwards as some sort of a solution emerges.
Okay, all right. We actually have now Vinny joining in on another stock that's been in the focus today. And, the news has not been the best. I'm talking about Protean e-governance. And it's been locked in a lower circuit, 20% lower. And that's because I guess the market is disappointed about what could have been a great opportunity. And I'm talking about PAN 2.0. So, Vinny, it's very clear, right? The company held a conference call. They're not eligible for the PAN 2.0 that the income tax department will roll out?
Absolutely. So they're not eligible for it, though they said that they have written an application or a clarification from the income tax department, and they're waiting for some revertal from there that why are they not eligible for it. But as of now, yes, they're not eligible for it. Now, in the con call, furthermore, what they highlight that, when you're talking about the service, PAN 2.0 was mainly a tech revamp service, which was going to be there in the income tax department, where they had applied for a request for proposal for this service. Now, this was around outlay of around 1,440 crores in terms of the government budget that was there coming in. But the company is saying currently this will not have an impact on the company's business which they're doing. They are mainly into the business of processing and providing services in terms for distribution services for PAN card. So most of the business, 3/4 of the business as of now in terms of PAN still comes in from these distribution channels. People and citizens still require a lot more in terms of assistance that comes in from even the company or even otherwise in terms of distribution assistance for the PAN business. Now PAN 2.0 was a tech business is what they're highlighting. So as of now, near term, it may not be an impact, but PAN 2.0, it will take a couple of years to get launched. Suppose that they'll have to watch out for, what's going to be the impact. Near term, no impact. Long term, they are also waiting out and watching out for what the decision is and what the decision will come in at that point of time.
Okay, all right, got that, Vinny. Thanks very much. Let me go back and ask Prakash about this. Prakash, hi, good afternoon. So this is the kind of casualty that kind of comes out of nowhere, right? For all those who've been talking very well about Protean, an institutionally run company and all of that, the great opportunity with the ONDC and a lot of the back-end work that they're doing, digital infrastructure work, suddenly they're disqualified for the next wave. What did you make of this, and what should investors be doing?
Good afternoon, Sukhbir. No, so I also am equally guilty of the fact that I believed Protean eGov was a brilliant business model and the moat was so strong and things like that. And, it has been kind of consolidating in this 1,200 to 1,500 zones for quite some time. But the fact of the matter is that the business of issuing PAN cards is significant in terms of contribution to revenue, almost 40% plus, if I remember the numbers correctly. Now, if that were to not come to the company, in whichever way and form the residual work around it comes in, it's not going to be the same as managing the whole PAN issuance business, right? So it's a significant part. The scale is very important, and they could do it at incrementally very good margins and costs. So it is a setback. So there's no doubt the market has read that right and this. But if the clarification brings in some sort of a hope that they'll probably be able to do some part of the value chain and restore some revenue visibility, things could look very different subsequently. But I mean that's just conjecture. I don't know how that happens. Interestingly, we need to understand what is it that has caused this omission for Protean not to be eligible for this particular RFP. So. And remember, it's at RFP stage, so there could be lots of things that could change. You can't write off things. You never say no for what could happen. But my sense is for the moment, the setback is real. And until that clarity comes, I don't think there could be any point in buying into the stock. So people who have it, of course, will continue to buy, keep it, hold on to it with the long-term future of digitization and all intact. But in the near term, this could definitely be a setback.
Okay, all right. Hi, Prakash. Good afternoon. Good to see you. And Prakash, I wanted to ask you about Nalco. I recall you were quite positive on the stock. Then we had a collapse in alumina prices. It went down. And then I recall, I think at around 140, 145, you said you believe that bulk of the bad news is already in the price. And the stock actually has done a quick fire 140 to 180. That's predominantly because also in Guinea, there is going to be a bauxite shortage, which in turn would supply some alumina. So there'll be a bit of an alumina shortage. And that's why we're seeing some pre-buying. Last I checked, I think alumina prices were back trending towards $400 per ton from a low of around $330 per ton. At around 182 rupees, what's your view on Nalco?
Oh, absolutely. I'm so happy you recall the conversation we had. And, at those levels, the lower levels, one of the things that I highlighted was the salience of the dividend yield that was emerging. And even if somebody were to buy it at that level for the express purpose of dividends, it was brilliant. Look at what's happening to Hindalco. Look at what's happening to parts of the Vedanta business. Aluminium overall, I think, is getting into an upcycle, which intermittently you will keep having these ups and downs given issues related to tariffs and all of that. But otherwise, on a global consumption pattern, I don't see any reason why alumina would probably, again, soften down too much. The Guinea shortage notwithstanding, I think it would probably be very stable and consistent towards a higher band. And if that were to happen, Nalco definitely benefits a lot, Nigel, as you know. And, it's a business that's got lesser risk and more reward potential at this point in time. So from a risk-reward perspective, even at these levels, it's worth holding on to. If somebody hasn't added at 220, 230, which was around Diwali time, you'll probably still be nibbling into it at lower levels. So it is a long-term story for sure. It's still unfolding. I don't think it's yet done. But definitely very positive even now.
Okay. Prakash, Delhivery, that's been a big mover, strong numbers, and it went through a long period of underperformance. The 52-week low on Delhivery was 236, and now the stock is at 349, so it's gone up 50%. Is there more steam from here in Delhivery? Its 52-week high, just for reference, is about 447, and the all-time high is 708, and the stock today is at 350.
Yeah, so even the all-time high seems like a misprint of sorts, and I think it was that exuberant, rara days of new age businesses getting listed back to back, and everybody was willing to buy them as if there's no tomorrow. It's exactly half of that, but it's still kind of not close to what the 52-week high is, for the simple reason that this is one quarter where the turnaround is very clearly evident in the numbers. Even the last quarter, and post that, there was an interview on the channel where you guys had quizzed the management about whether this was going to be consistently continuing with this trend. And that's exactly what's happened. My sense is this progress will actually strengthen it and consolidate even further favorably, which means there will be allocations which will come afresh. Because it's a great business, difficult to replicate. What's happened is in the difficult times where e-commerce slowed down, the competitive intensity went up. A lot of the other smaller players are out. Where even if you look at some of the other names which have gone into this express delivery, this thing as well, you have a lot of them struggling to make money. So delivery's gone through the tougher part, and the reason why it's turning profitable is the diversification and not just dependent on certain channels or segments. So that's where things are looking up, and they could probably start doing more of the right things, which have resulted into this turnaround. I'm quite positive. In fact, after these numbers, you'll probably see the stock attracting much more allocations in portfolios, especially institutional portfolios who have to look for new age businesses also as part of their portfolios. And you don't have much of comparable businesses available, so difficult to compare it on a PE multiple, but unfair also at the same point in time because it's got a different trajectory. But yes, the PTL business is what's kind of working, and they'll probably do more of that.
Okay, so Prakash there, seemingly. happy with delivery, at least what they've done in the fourth quarter. Got that. Thanks very much, Prakash, for joining in. Always a pleasure having you on. Looking forward to the next call soon. We'll take a break on that note, come back on the other side, and we'll have Aditya Sood, fund manager at Incred Asset Management, joining in with some thoughts.
Okay, welcome back. 100 points lower, 24,920 is where we are at. So it's a full 100-point cut now coming through. Aditya Sood is with us, fund manager, Incred Asset Management. He's with us now to take us through what he's making of things. Aditya, good afternoon. Good to have you here with us. And it's always an interesting conversation because we end up talking about specific names, and through specific names, understand your thought process about at least a bunch of industries as well. So many of what we've discussed in the past in terms of specific ideas have been in the news one way or the other. Newland Laboratories, saw a sharp move recently on the, Tejas Network, not exactly defense, but we've discussed this stock in the past. On the hospital side, Indraprastha Medical. What's keeping you busy? What looks, out of what we've discussed, and about 5 or 6 names on my radar, I'm gonna throw it open to you, Aditya. What looks very attractive? Because broadly markets have come up very sharply. Although there are individual names, of course, where things will be attractive and you can justify based on valuations and the story, etc. Go on.
Thanks for having me on the show. Essentially, so if I have to sit back and think about markets today, I think so. There are certain themes which are very, very long theme stocks. The story might, play out over a 3, 5, 10-year period. Obviously, there have been, temporary hiccups in, companies like Newland because that, but, I think so. The management amply clarified that this year is going to be, essentially very, very subdued for them in terms of performance. So what we have been doing essentially is we are trying to understand how deep the moats are getting. If you look at the CDMO space in India, we clearly like that space. This is the first time in last at least 10 years when we have seen all the 6 big pharma. So that comprises obviously of, biggies like, essentially Merck, Eli Lilly, Roche is returning to India. That is what I've been told by industry sources after 10 years. And the biotechs. Obviously, the biotech trends in the US are, sort of accelerating at this juncture. So we like a CDMO as a theme. What we are trying to figure out is that, let's say if China is a key competitor, which is essentially, WuXi, and WuXi, as you are aware, is having, more than 50-60% market share in all the new drug development in the world. What we are trying to understand is which are the real capable companies. Obviously, we saw, Divi's announcing a very large deal with Eli Lilly for GLP-1. So we believe that Indian companies are capable. There is a 3 to 5 to 10-year runway in this story. Valuations, I would say, are still very, sort of reasonable in this space, particularly for a company like Newland. Essentially what we have liked, and we have been, holders for Newland since, 1,200 rupees upwards. The second question here is that, what happens to cost of production? So this is China +1 for sure, but this is also Europe +1. So this is one theme that we like. We also continue to like the hospital sector, particularly, Indraprastha Medical and the HCG that we hold in the portfolio. We believe that, valuations are a bit challenging in this space, and that is why we have resorted to owning, stocks wherein we see limited scope for P multiple re-rating to come through. And we like the product space, under IT services bit. IT services obviously is getting, sort of disrupted. So we like, companies like Intellect. What we have seen in the previous quarter is that, they have reported the highest margin ever in their history, which was like, closer to 28%. This used to be a 20% margin profile company for the longest period of time. 6 quarters, they were stuck in that margin range of, 20-odd%. And that is why we have seen such a sharp re-rating in the stock.
Aditya, just a quick word on HCG. Where are valuations at compared to other? It's a cancer specialty hospital, but where are? And of course, now there is the financial investor changed hands recently. Where are valuations? Is it an efficiency story here? What's the play?
I think so. Cost takeout obviously is a play. Capital allocation is obviously a play here. If you look at they can possibly, look at a divestiture of one of the businesses here, which is the fertility side of the business. Obviously, they have done one divestiture in the past. So we see the financial investor, being super focused on margin improvement. If you look at, the valuation of HCG, and if you compare it to, let's say mid-sized hospitals, what we find very interesting here is that, it could be a very, very credible play going forward. Obviously, the average revenue per occupied bed or the ROCs are not as high as a full-scale, full-service hospital. But we believe that there is significant room for return on capital employed, at least 5 percentage point over a 2-3 year period to come through. And this should be coupled with margin improvement as well.
Aditya, hi. We've spoken about Tejas Networks in the past. You've liked it. You've explained why you like it. The stock is corrected now post the Q4 earnings, the big loss that it reported. So stock fell from 900 down to 700. Did you buy the dip at these levels? Is that a good opportunity now, the current price?
Yeah, so we do believe, we have obviously bought the dip. We do believe it is a very, very credible and a good opportunity for very simple reasons. If you look at the loss that they reported in the previous quarter, a part of that loss was a write-off on inventory, which was a fairly large number. It was like in the vicinity of, 150 odd crores that they reported. I would like to believe that this is a one-off, because if a company which has, sort of generated 4,000 crores of incremental revenue in last 3 years, possibly, writes off inventory essentially because of obsolescence, I would like to believe that that was a one-off. Secondly, one has to look at the R&D spend that they are currently incurring, because, part of that gets capitalized. Our view is that, and thirdly, there is a ESOP cost also, which is very, very heavy in the case of Tejas Network. So our belief is that, this has become a stock wherein the market would like to believe that, they have an order book that needs to be backfilled. And our understanding, as far as our understanding goes, we believe that there are 3 critical elements of order book going forward. One is the, obviously the additional rollout from 1 lakh sites to possibly, 2 lakh sites for BSNL to be very, very competitive for the, 5G offering. I think so. It is all a question of time. The telecom minister has clearly said that there is no need for India to look at foreign equipment as far as the BSNL rollout is concerned. So that is point number 1. This could be a 12 to 14,000 crore opportunity. There is a 4G, 5G upgrade opportunity, which could be a 4,000 crore opportunity. There could be a BharatNet opportunity. Interestingly, Tata's acquired Tejas because of the BharatNet opportunity, but we have not seen Tejas declaring any orders from BharatNet. We have already seen system integrators declaring orders like, Nagarjuna or some of the packages in Tamil Nadu, what we have seen. So essentially, our belief is that there is a tangible opportunity of 15 to 20,000 crore, if not more, coming through, wherein, Tejas has a right to win. Obviously, there is no significant competition here. So our belief is that, the stock should bounce back. Another thing that I would like to point out today is that, if you look at the market multiple of Tejas, which is essentially in line with the market multiple, which is like 20 PE. Our belief is that, going forward, it is very difficult to lose money in PE derating. And as the earnings trajectory of this company changes, now the good thing is that, they continue to reinvest very, very heavily in R&D. You have a R&D headcount of 1,350. So last 4 years, practically, they have trebled the R&D headcount for this company. That tells you that they are building serious capability for next 3 to 5 years.
All right. Hi, Aditya. Good afternoon. Got that point with regard to Tejas. You continue to remain positive on the prospects on various aspects. Big pool. They could win some orders out there as well. Got that on Tejas. Let's talk about one sector that's been the hottest, because of the skirmish we had with Pakistan on the border. That is the defense pack. I recall in the past, you had one stock that had some exposure out there was BEML. This could be a few months or so ago. How are you all playing this theme, defense? Because suddenly a lot of interest out there, plenty of stocks are running away. Something that you all have got?
Yeah, so BEML is something that we are structurally very, very positive on. I think so they have got capability both on the defense, mining, the transportation side, all the three themes that we like. There is a cost takeout play here. A lot of employees are getting, retired every year. And what we are keeping a very, very close, watch on the employee headcount here. On the other defense names, we are of this view that, the rally has been very, very sharp. And we are looking at second derivative plays here, not necessarily pure play defense companies, because most of these companies continue to trade at, anywhere from 10 times revenue to 20 times revenue. Obviously, we have seen a very, very sharp up move in companies like IdeaForge, wherein obviously Streets continues to believe that, orders should significantly ramp up going forward. But our view is that, it is better to play defense through EMS plays. We have Sentiment Electronics in the portfolio, which is obviously a very credible play on both defense and space. Obviously, the stock has done well.
That's BEML. Let me ask you about those second order plays. Aditya, hi, good afternoon. Surbhi here. So you're saying that you'd rather look at second order plays, not the obvious names that have run up. So if you could just expand on that, what do you mean? I mean, how else would you look at playing the defense opportunity?
So Centum is one such name. If you look at what is the problem in the defense business, obviously it is the lumpiness of the business. We have seen this 40,000 crore of, sort of emergency procurement coming into play. So Centum is obviously qualified as far as aerospace and defense. Obviously, you need to see the capability of these companies. The good thing about, the EMS plays here is that essentially it is a combination of, the ITAR approval. Very few companies would have that approval in terms of, either servicing it to, essentially Boeing or Airbus over a period of time. So I think so EMS is a better play indirectly to play today. And once we see, some bit of correction, clearly defense names need to be bought on correction. But one needs to be very, very careful about the lumpiness of, the balance sheets. Working capital completely tends to get stretched. Clearly, we like, BEML or BEL, as a forefront defense player.
Okay, BEL and BEML. Got it. Good conversation. Thank you very much, Aditya, for being with us today and taking us through some of those interesting themes. We do have to take a quick break, come back on the other side. As always, a check on dealing rooms. We'll have Nimesh joining in with all the D Street chatter. And of course, then some final half-hour trading ideas coming up.
Welcome back. Well, the Nifty was down 100 points. It's cut its losses a little bit because the Nifty Bank from trading in the red, it's actually moved into the green. I think the big boy HDFC Bank, that's woken up. So that's always helps. And I think ITC is the other one that was trading in the red. That's moved into the green. So both those two should come up for you on the screen, HDFC Bank as well as ITC. But it's that time of the day when we have Nimesh who joins us to help us out with what he's picking up in D Street Chatter. Nimesh, what's it?
Well, Nigel, after a big move last week, a day of consolidation, so to speak. Yeah. But again, the individual stocks are doing good. The broader markets have done well today. But from a flow perspective, it's quite muted and soft. So not much participation from larger institutions. And also the fact that there are so many large blocks which the supply is going to come. So, that will attract a bit of capital as well. So that's overall. The sector which is consistently doing well is the PSUs. And now it looks like the focus is shifting from the defense names, which have rallied pretty hard, to lower end of the PSU stocks, like the small PSU banks, the small PSU across the board stocks are seeing a bit of traction now. So that is one space which might see a bit of a trading bounce in the days to come, the smaller PSU names. That's overall feedback. The other sector which has done well today is the rate sensitive. So autos have done well, especially the two-wheeler names, and so is the real estate stocks as well. So it looks like there's a bit of shift towards the rate sensitives, because anyway the sense is that at least there are 2 more rate cuts which are likely. So that space has done well today. But as I said, quite a day with even flows quite muted from larger institutions.
Okay, all right. Let's talk about individual stocks. And Nimish, what are you picking up?
Well, I'll continue with the theme of large blocks, Nigel. So the first stock on my list is PB Fintech. Ever since the earnings and the con call, the stock has been under pressure. There is selling pressure from large institutions because of valuation concerns, but now there is a strong buzz or an indication of a large block as well in PB Fintech. So that's the first name. Second stock is SRF. After a long time, some bit of buying seems to be back. And also I understand the selling pressure from a large FII seems to be largely over in SRF now. So that's the reason why that stock is buzzing in trade. Third, couple of auto names, which is Bajaj Auto and Hero MotoCorp. Both are buzzing in trade, and there are delivery-based buying in the two-wheeler auto stocks in today's market. So that explains the delivery-based buying in both those names today. The last one is Varun Beverages and InfoEdge. Both are under pressure, but there is consistent selling on, especially on Varun Beverages in the last many days now, and that trend continues in Varun Beverages even in today's markets. Expect very high delivery volumes in Varun Beverages, and add to it, even InfoEdge is selling a lot of selling pressure today from larger FIs.
All right, got that. Nimesh, thank you very much for all the action on this, as always. Let's go across to Rahul Sharma once again and get some final trades in. Rahul, there's been a more range-bound session, very specific in terms of individual stock action. What's your final advice, trades on Nifty, Bank Nifty, or any other stock?
Yeah, I think I'll go stock specific here. Reality has been doing well today. DLF is one stock that we like. So for a BTST trade, one can look to go long in DLF. One can even consider the 740 call options in the range of 16 to 18 rupees. Stop loss can be placed at 10.5 and about target of around 32 rupees on the upside. So real estate is the place to go. DLF is one stock that we are liking on a BTST perspective.
Okay, all right, Rahul, got that. Thank you very much for the all the trades. You have a good afternoon, and we'll look forward to connecting again soon. Let's go back to the big story on defense. Now, the defense sector has been in focus recently, and sources are now telling us that the Defense Acquisition Council has granted the armed forces emergency powers to procure equipment. This equipment would include sort of things like loitering munitions, counter UAV systems, ATGMs, and other ammunition. This is all being done to replenish equipment that was used recently in Operation Sindoor. 15% of the defense modernization budget can be used for emergency procurement, and deliveries are to be made within 1 year. Remember, the defense modernization outlay for FY26 is 1.6 lakh crore rupees, and the upper limit for the emergency procurement is 24,000 crore rupees. However, the actual expenditure is likely to be a little less than this upper limit, so maybe a little lower than 24,000. But the caveat is that all these deliveries need to be made in the next 12 months. So that's emergency powers for procurement going to the armed forces. Well, with that, let's actually get you a view that we got on this big rally in defense stocks. Is it sustainable? Is it too late to jump onto the bandwagon? What should investors be doing? Sanjeev Prasad of Kotak Institutional Equities voices some concerns on the huge run-up and the current valuations. Hear him out.
We were just buying anything and everything without looking at whether the nature of what we're going to the same as in the past is explaining. Second thing, whether the kind of EBITDA margin many of these companies are earning, whether that will sustain in the future or not. And I'm surprised to see the kind of very high margins this company are reporting. So that could also come under some question mark. And the third is obviously the valuation part, which every investor has to look at ultimately, right? Ultimately, you are paying for whatever you're buying, and you look at some of the numbers they make really, very little sense to me at least. If I look at, let's say, something like the potential PR, since you talked about that, the market cap is somewhere about 55,000 crores. The net worth is only, by the way, 1,300 crores.
Okay, let's move on and get to Ria now. She's going to tell us how the valuations is shaping up for each of these companies after the astronomical run-up that we've seen.
Well, defense stocks are in focus once again, although today we're seeing a bit of a pullback across the entire defense pack after the very sharp rally that we saw since the 7th of May. Today, the top losers include HAL, Midhani and Mazagon Dock. We've seen pullback in other names as well, like Data Patterns, Cochin Shipyard, GRSE and BDL as well. Although today, Premier Explosives and Zen Technologies do continue to trade higher. Premier Explosives is up around 16 to 17% and Zen Tech is at an upper circuit of 5% for the 7th consecutive session today. Now, in terms of valuations, all of of these stocks that we've looked at across the entire pack are now trading above their respective 3-year average PEs. Some stocks are still off around 2 to 7% off their 52-week highs, which include Mazagon Dock, BDL, Paras Defense and Bharat Electronics as well. Some others are still down anywhere between 11 to 35% off their respective 52-week highs, which include the likes of Idea Forge, Cochin Shipyard, Zen Technologies, MTAR Tech and DCX Systems as well. Now, for HAL, Morgan Stanley has come out with a note on the stock after the earnings call on Friday. They've downgraded the stock to an equal weight rating and they've said that the margin and new order book outlooks were strong for the company, but the market may be concerned about the muted execution guidance going ahead. Now, even amid all of these valuation concerns, the earnings growth and the outlook remains quite strong for these companies going ahead. For HAL, they do have a very healthy order pipeline of rupees 1 lakh crores, which is expected to materialize within the next 1 to 2 years. For Garden Reach Shipbuilders, the results were above estimates. Net profit margin was above the company's guidance of over 8% for FY25. For Cochin Shipyard as well, we saw a good set of numbers, although the order book numbers still remains to be seen for this company. Over the weekend, we also had Zen Technologies and Data Patterns reporting their numbers. For Data Patterns, although the order intake was weak in FY25, that is expected to pick up going ahead, and they've maintained the revenue growth rate guidance of around 20 to 25% for the next year. For Zen Technologies as well, the OCF is expected to turn positive in FY26, and they also have a cumulative revenue expectation of rupees 6,000 crores over the next 3 years. So all in all, a good set of numbers for all of these companies, and the outlook also remains quite strong. Going ahead, we also have BEL and Mazagon Dock that are expected to report their results over the coming few days.
Okay, well, defense companies are increasing capacity and are also sounding bullish on order prospects. So we actually spoke to a bunch of managements over the last 24 hours or so, HAL, Zentech, Data Patterns and more. Listen in.
अब हमारे पास करीब 65,000 करोड़ का LCH का ऑर्डर जो हाल ही में आया था, बिगेस्ट ऑर्डर इंडियन डिफेंस हिस्ट्री में है। ये एक बड़ी ऑर्डर है 156 LCH। दूसरी है जो अभी 83 LCM Mark 1A जो एग्जीक्यूशन में है, और 12 Su-30 जो हम बनाने वाले हैं वो एक ऑर्डर था, और 240 Su-30 इंजन्स। कुल मिला के आज के दिन 1,90,000 तक ऑर्डर बुक है, और ये अगले साल में और ज्यादा होगा।
As the industry, whole of the industry's been discussing with the armed forces, we have also been very much engaged with them, and we do expect some fast action to happen in this regard, but the quantum and the time is unknown at this point in time. And we currently have an order book position of about 691 crores. But again, we are expecting a few more orders in this and the next quarter. We were saying about 800 crores in the first half of the year, and I think we still stick to that. I think that 800 crores is still very visible to us. We should be getting those orders. But with the new situation, I think the order book position will be substantially higher.
We expect more than about 1,500 crores contracts to happen this year in terms of new orders. So our revenue guidance remains 20-25% on top and bottom line growth. We expect in the first half we should get probably 600 to 800 crores of contracts, and the rest about 1,000 crores orders we expect during the course of this year. So the contracts have got delayed, but this is likely to happen in the next 5-6 months' time. We may take some 1 or 2 strategic contracts with lower margins, but that is to build the competency in the company and address large markets going ahead.
Okay, let's stick with the theme then. Bharat Electronics will be reporting its Q4 results later today. Ria is joining in to tell us what's the street expecting from BEL. Ria?
Well, yes, BEL is all set to report its Q4 numbers today. So let's take a look at what the street is expecting. We're expecting a revenue growth of around 6% on a year-on-year basis. EBITDA and net profit are both expected to go up by around 1% each. And the EBITDA margins are expected to contract by around 114 basis points versus Q4 of last year. Now, it's important to note that the company has already reported an FY25 revenue of rupees 23,000 crores in its FY25 operational update. But this was X of the other operating income. They've also reported order inflows are worth about rupees 18,715 crores in FY25, and they've fallen short of their yearly guidance of rupees 25,000 crores. Now, some key things to watch out for in today's result will be that the revenue and EBITDA margins are expected to be muted, coming off of a high base and a less favorable product mix as well. Some other key monitorables will be the outlook on the FY26 and 27 order intake, especially the large-size ticket items like the QRSAM and MRSAM orders. Ramp up of non-defense and export businesses will also be something to watch out for, in addition to the execution of orders like for LRSAM and the electronic warfare projects as well. And lastly, we'll also be looking out for any spillover orders from FY25 to the next year.
Okay, absolutely. BEL is a big one, almost a key player in almost virtually every big defense system we have out there. And numbers are tomorrow. Thank you very much, Ria, for that. Looking out for this. Let's move on and talk about the two-wheeler space, because actually today on a down day, two-wheeler stocks have been doing rather well. Let's actually pull them up. Let's see how they're doing. Last I checked, between 2% and 3%, and included all the names. Bajaj Auto, by the way, is up 4%. That's Hero up 1%. And Eicher, it's cooled off from the morning highs, about a 0.5% gain. But Bajaj is the best one of the lot with a 4% up move. Now, these stocks have been buzzing around on the back of strong management commentary that has come through. And it seems early indications are that sales so far in May have been pretty okay. Sudarshan's joining in with more details. So tell us more.
That's correct. So over the last 3 sessions, all these two-wheeler names have moved higher in the range of somewhere 7 to 8%. There are reasons to it. First, the commentary from both Eicher Motors and Hero MotoCorp were positive. Eicher Motors had indicated that positive sentiment is returning in urban area, which has been a concern for the last few months. And second, Hero Moto, which is leader in the entry-level segment, has indicated that it will keep seeing a healthy growth even in FY26 and will outperform the industry. There is another reason to it. Vahan data, registration data, if you see for month of May 2025, that is from 1st May to 18th May, it indicates that 2 segments that have seen a growth in registration data YOY, those are two-wheelers and three-wheelers. So total registrations in May so far are up nearly 1%. For two-wheelers, it's up more than 3%, and three-wheelers, it's up almost 3%. Apart from these 2 segments, all the other segments have seen a decline. Now, apart from all the other two-wheeler names, there is one specific reason for Bajaj Auto, which is top nifty gainer today. So KTM had filed for insolvency in November of 2024. After in February of 2025, creditors had approved the restructuring plan for KTM, and under that plan, Bajaj Auto International Holdings was needed to secure 548 million euro of loan before May 23 of 2025. Now, over the weekend, news has come out. Bajaj Auto has disclosed to exchanges that its wholly owned subsidiary, Bajaj Auto International Holdings, secured 566 million euros of loan from a consortium of banks. Now, what will this help KTM? It will help KTM to get back to growth path, and that because of that, KTM has been basically struggling over the last few years because of financial problems. Now, with this loan, analysts believe that it will help them to get back on the growth path, and that's the reason Bajaj Auto is top nifty gainer.
Thanks a lot for that, sir. Well, let's hop across to Sudeep Bandyopadhyay, Group Chairman of Indie Trade Capital, joins us on the show. Hi, Sudeep. Which bike are you jumping on? What do you like from the two-wheeler SPAC?
Well, I may not be jumping into any of them now, but as far as the entire sector is concerned, I do like Hero MotoCorp at this stage. I think rural consumption, there is a bit of a turnaround scenario. Monsoons are expected to be good. The number of marriages, dates of marriages is significantly higher in the forthcoming months. So I'm looking at Hero MotoCorp from just a pure short, medium-term point of view. Valuation-wise, also, it's, I think, reasonably priced compared to peers.
Got that. Sudeep, what about Industars? First, there was the dividend disappointment. It didn't come through with the numbers. It's still possible that they'll announce it in the subsequent meetings. Before now, there is no dividend disappointment. And now the fate of Vodafone Idea also hangs in a balance. Was Industars ever a part of your recommendations to clients?
Well, we have been a little careful because they are dependent on Voda Idea and, to an extent. And Voda Idea fate was completely uncertain. And we always believed that, investing in Voda Idea was like a gamble. A lot of things can go right, but things can go wrong as well. And that script is getting played out as we speak. I think, beyond this entire AGR dues and whether it's going to be waived, government is going to consider favorably certain concessions or not, I think it's completely in the realm of speculation. But unfortunately, on the other side, which is operational performance, there, while the 5G rollout and all that is happening, the customer retention is not really good. They are losing customers month on month, and I think that's not good. Post the FPO, we were expecting that the drain or exit of customers will be stopped, but that hasn't really stopped, and that's a little unfortunate. So whether you look at it operationally or you look at it from the balance sheet point of view, I think Vodafone Idea is in a pretty precarious position. And under the circumstances, the tower company which services them, I think we have to be a little careful. Yes, they have other clients, Indus Tower I'm talking about, but Voda Idea also is a client and they are in a precarious position. So it's better to watch this space rather than start getting into there because the correction has happened or some more correction may happen. It's better to wait and watch.
Okay, all right. Wait and watch on Vodafone Idea. Stock down about 8% today. We'll take a quick break. Sudeep, stay on. We have more questions coming up for you. But as we take this break, let's tell you a little more about our latest offering. This is some good news coming in for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the CNBC-TV18 app from the Apple Store or from Google Play. Just scan the QR code on your screen and you can get to it straight away.
Welcome back. Well, let's keep an eye out on a couple of stocks then. And from the broader markets, actually the ones that we highlighted earlier today, Graphite India as well as HEG, both of them are spiking up because there is that talk that could be a potential supply scarcity that could emerge. Because, you have one of the largest graphite electrode makers globally. That's Shobha Denko. That used to be known as Shobha Denko. Now it's Resonec. They, in fact, have gone ahead and said that they're going to be shutting down production in China as well as Malaysia. And because of that, there is this talk of shortage, and which could in turn push up prices. Sudeep, any view on HEG and Graphite India? They react very violently, both to positive as well as negative news. Both the stocks are up 15% odd. It's captured this piece of news?
Absolutely, Nigel. You captured it pretty well. They react violently, both on the upside as well as the downside. But fundamentally, I think, if you are have a little patience and you want to remain invested for long term, I think these are good buys. Look, globally, I think most of the countries are moving out of production of graphite electrodes. And, HEG and graphite has their product has a strong demand in manufacturing of steel, and it will continue to remain there. So they will continue to have a great opportunity, and the opportunity size will keep increasing. So I'm reasonably confident about these stocks in the medium to long term. Yeah, short-term volatility one has to withstand based on news flow, based on what's happening to other graphite electrode manufacturers globally. I think prices widely fluctuate, and you have to be ready for this volatility if you are entering these counters.
Got it. Okay. All right. Well, Sudeep, I wanted your view on a couple of other notable movers today. Just throwing a few at you. Nucleus Software, you have KPI Green. The stock last week, I think, was at 350. Today, it's at 480. So big move is what we're seeing. These are earnings reactions, KRBL as well. Some of these stocks saw a sharp correction, but they're pulled back. Nucleus, KRBL or KPI Green. Do you like any of them?
Nucleus, I do like. I think they have been doing a lot of work quietly, and they're very focused on the verticals they are working. They have a strong, steady, stable management for a very, very long time. And, they understand their clients. I mean, I will say that having spoken to multiple of their clients, I think they have a good reputation on ground, and I think they are sticking to the, core competencies. So the performance has been good, of course, in this quarter, and I do like that. Software has a lot of challenges, a lot of volatility in the current environment, but I think some of these companies who are sticking to the core, sticking to the niche areas have good opportunity going forward. Other result I liked, Nigel, is Delhivery. I think finally performance has started improving. And what is more interesting is in PTL, partial truckload segment, which is where they have started getting traction. Of course, express parcel was a bit subdued, but I'm sure that will pick up with e-commerce picking up.
So the PSU banks, that index is the best performing sectoral winner today, 1.5% higher. Bank of India, UCO Bank, Indian Bank, Union Bank, across the board, big gains. What's driving the optimism today? And is there a pick that you like?
Well, I do like State Bank of India, and it's not in the list you mentioned. But I think if somebody wants to play safe, I think SBI is a very good bet, even at current levels. Overall, we know the argument PSU banks are relatively better valued compared to private sector banks. They used to have a lot of challenges, and that's why the valuation was always significantly lower compared to the private sector leading banks. But a lot of improvement has happened over the recent few years, and things have started looking up in some of the public sector banks as well. And I think time has come for them to be a bit better valued compared to where they were. So when the market picks up, and that's what we have been witnessing over the last few days, I think they have started going up. BFSI overall is something which pretty much everybody is banking on for carrying the next leg of the rally. And PSU banks will definitely do well if that kind of logic holds.
By the way, as we're getting ready for the close on a lackluster day like today, again, railway stocks have been doing well. RVNL, Aircon, all these stocks have done well. And this month, many of them are up between 15 to 20%. Sudeep, very quickly, final thoughts. Railway pack buzzing again. Anything you're picking up? I mean, any thoughts here?
I'm a little careful as far as the railway stocks are concerned, not because of anything else, but the valuation. I think even now when I look at the valuation and try to justify them vis-a-vis their earnings and performance, I find it a little challenging. So I prefer to stay a little away from the railway stocks. IRFC is something which can be looked at because financing opportunity is significant and they're moving beyond railways as well. And that's what they've stated categorically. So if somebody has to look at, they should look at IRFC at current valuation, but keep 1 year plus time horizon, at least when you enter the stock.
Okay, all right. Stay with us, Sudeep. What we're going to do is just wrap out the market and then come back to you for more. So it's not going to be, it's a 0.3% cut on the Nifty after a 4% rally last week. So keep that in mind. And broader market, by the way, still far more stocks higher than lower. So about 1,800 stocks up and about 1,000 stocks lower. That's the final tally that we will see at the end of today's session. So on the downside, actually just three names with 2% plus losses: Grasim, Zomato, that is Eternal, and Infosys. That's it. Actually, the IT pack underperformed. With the small losses, Tech Mahindra down 1.3, TCS down, Wipro down, but all with in excess of 1% cuts. On the upside, on the Nifty, there was only one noticeable big mover, that is Bajaj Auto, and Bajaj did very well. There was also Shriram Finance and Power Grid with gains in excess of 1%. So it was a pretty subdued kind of session, but no such problems for the broader market with lots of movers and shakers.
Well, IT's had a rough day today. Remember, the US futures are pointing to a negative start after Moody's downgraded the US economy. So that's having some impact on IT names like Infosys, Tech Mahindra, TCS, Wipro, all down over 1%. Grasim is the top loser, and that's seen a cut of nearly 3%. And other drags include Tata Consumer, Asian Paints, Dr. Reddy's, and even big boy Reliance Industries dragged 8th Street.
Absolutely. It was quite a lackluster day for the large cap screen. Mid caps, if you're looking out for some gainers, then there were the result players like Delhivery. What a move from that stock, 10% higher. Divi's, NBCC, all these stocks were neither on earnings or positive news flow. They did fairly well. But then on news flow, you had the casualties of the day. Protean down 20%, Vodafone Idea 8%, Credit Access Grameen 7%. And of course, the cooling off on a lot of defense stocks. Examples being Paras Defense ending about 5% lower. There was Mazgaon Dock down about 2.5-3%. Cochin Shipyard, Solar Industries, Data Patterns Many of these stocks losing some ground, not falling too much, but down 2-3% for sure. So that's how it has played out. The gainers tally included some more names like Alembic, something like Aarti Pharma, Suven Life Sciences. So a couple of these names managed to buck the trend. But otherwise, a fairly cautious day of trade and a quiet start to the week. Well, with that, it's curtains on this edition of Closing Bell. Many thanks for watching, but don't go away because we have Markets Forward coming up next.